Now, we've noted in technical analysis that prices tend to trend over time, but there are different types of trends, and let me explain. The first type of trend is the primary trend, and this can be a long, drawn-out, secular bull or bear market. For instance, in the stock market, we've had almost a 10-year bull market. The second type of trend are the secondary trends, and this can be a counter trend to the primary trend. So if you have a long bull market, in the middle of it, you might have a 20% pullback that lasts a couple months that signifies a secondary bear market. The next type of trend are the short-term trends, and these can last weeks to maybe months, and they can be either the same as the primary trend or counter to it. And lastly, you've got the intraday trend, and these are really short-term moves in the market. For instance, you could have a stock market that rallies 200%, but at the same time, you can still have days that drop 3 to 5%. So just because the trend is heading up doesn't necessarily mean there can't be any counter trends. So let me give you an example of Bitcoin, and this is a chart going back to 2011, and we're looking at Bitcoin here on a log scale. And what this log scale means is that on the y-axis, the distance here is separated by percent moves. So it means that a move from, let's say, 100 to 190 is going to be the same move as 1,000 to 1,900 on this chart. So you'll notice that Bitcoin has been trending higher. The primary trend has been up over time. Since 2012 to 2018, this trend is still intact. However, there's been some very vicious counter-trend moves during this time period. You can notice that in 2013, there was a 70% pullback. In 2014, there was another 60 or 70% pullback. Even in July of this year, we had a 30% pullback. And even most recently, you can see a 50% pullback in the price of Bitcoin. So just because the trend or the long-term trend is going higher doesn't necessarily mean you can't have any counter-trend moves.